Hi, this is Zak Mir, editor of Spreadbet Magazine. We'll look at some Bulletin board hero stocks on Tuesday, July the 8th. And I'm starting off with Tori Amos, where there's been an unwelcome pullback from the basically top of the range, what became the top of the range at 0.25 pence, back towards the area of the 50-day and 200-day moving averages shown here in blue and black, respectively. Likelihood is still that we're in the run up to a golden cross buy signal, that both these averages are looking positive, and that we've also seen a rebound off the 50-day moving average at 0.12 pence. While we're above that, I would assume that the stock can go back to the top of the 2.5 pence range over the next 2 to 4 weeks, and really at this stage only back below the floor of this falling November price channel, and May support at 0.1 pence would really be outright negative. Indeed, I'm looking for the 50-day line to hold anyway. So back towards 0.25 pence as the next step, hopefully, for Tori Amos. Stock which has been less of a problem in the recent past is rare earth minerals. Here we've seen the extended flag, and also the way the shares just managed to hit the implied target written on this chart quite a while back now of 1.5 pence, which was the intraday high of Monday. Ideally now we'd see support coming in for the shares at or above the 1.18 pence initial June resistance, and then maybe a retest of the 1.5 pence, maybe up to 1.6 pence zone later in July. Next up is Octagonal, a stock which has been rather close to my heart in the recent past. Was expecting this consolidation here at the beginning of June to take the shares back up to the implied 1 pence target, but we've had to have a second consolidation here. V-shaped bull flag now, and then a gap, unfilled gap to the upside so far through the 0.5 pence zone. Ideally now we'll see no end of day close back below the floor of this gap at 0.43 pence, ahead of another attempt at cracking the 1 pence area and the top of the December rising trend channel. Where the line in the sand in terms of being bullish here is the 20-day moving average at 0.39 pence. Below that, it would start to look like a yet another failure here. And if you're cautious, perhaps you might also want to wait for 0.6 to break before taking the plunge on the upside. A couple of shares now which have a rather similar charting perspective at the moment. First is Petroleum, where we had the double bounce off the 50-day moving average, something I'm expecting to happen. Tori Amos mentioned earlier on. And then the break of the 10-day line, currently at 2.35 pence. And as we broke that, quite an explosive move to the upside. The situation now is that we'd be looking for the resistance on the way up around 2.5, 2.6 pence to come in as new support. And while above the 10-day moving average at 2.35 pence, a partial or even full retest of June resistance at 4 pence. Best case scenario and offer at the moment 4.5 pence, and only really back below the February price channel floor at 1.84 would really be bullish. You can see we've got this extended RSI uptrend line here, which is supporting the break to the upside. Overall, looks very positive anyway, because the support in June was well above the March resistance, just above the 1 pence mark. Petroleum, rather similar to ASTA Minerals, just in the latest configuration here. We have this similar rebound. In fact, it was actually above the 50-day moving average at 1.44 pence, and then a break of the 10-day moving average at 1.76, and really above that 10-day line. We're looking for a partial or even full retest of the best levels of last month towards 4 pence. Maybe if you're conservative, you'd be looking for, say, 2.5, which would retest September resistance. But it does look like we've got quite a decent wide trend channel here from this time last year on the daily chart, and the RSI at 58 is just about right for going long even at current levels after yesterday's rise. That's it for me today. More updates at spreadbetmagazine.com.